see the NASDAQ actually down 1.5% here today. You've got the S&P 500 down 1% here today. I mean, one thing to notice is as we see this pullback, look at and I always like to do this, look at the best performer, the Dow Jones. Not really what we've been used to, right? And I've been saying this a lot recently. I know I keep making this point, but it is interesting to watch this shift in market favoritism. We see a proper flip on its head of the favoritism here. What I mean by that is the favorite recently has been the Russell, the Dow Jones, then you have the S&P, then you have the NASDAQ, right? The NASDAQ's not been the leader for the last week or so. Now, in the last year or so, 2 years, NASDAQ's been, the winner. But we see some shifting here in the indices this morning. I'm probably going to get actually trailed out of my trade today on XLK, which would be fine. I've been in this trade since April. So, oh my gosh, I've been in this trade for a long time. I bought the XLK ETF during this dip in April. I was just mentioning to Frank just before jumping on the live stream that I'm very likely to get stopped out here of my XLK position. I'll show it to you. Actually, I'm definitely getting stopped out. Yeah. Where's I got to log into my brokerage. Hold on, guys. In case I don't want to dox myself, just stay right there for a second. I'm just going to do it off screen, just in case I don't want to show any personal information, which I definitely would have shown personal information now that I just did it. Okay, we are good to go. Okay, so here we go. XLK. So yeah, we're going to get stopped out. Market opens in 6 minutes, trailing out of the XLK position. And I'm not going to lie, it'll be a little sad to see it go. I've been in the tech sector for the last couple months. It's been a monster trade recently with semiconductors, flying high, and been putting in these higher highs and higher lows. But today, I was looking for this level of support to hold for the NASDAQ to keep pushing, and it seems like we might have lost our momentum there. So looking like we're going to get stopped out here in just a moment. You might say, well, Nick, why aren't you stopped out already? It's because I'm trading an ETF, and the trade will trigger on market open, which is in about 4 minutes. So in 4 minutes, I'll be taking out the trade. And that's going to mark the end of this. Well, let's see. How long have I been in this position? I've been in this position for 90 days. That is a 3-month long winner. It had to come to a close at some point, but I'd be lying if I didn't think or didn't hope that and think. I thought we would keep going, but I'd be lying if I said I didn't hope that it would have kept going. This thing has been a really, really strong performer. And when you say tech, Nick, what are you talking about? For people who may be a little confused by that, I'm talking about like technology companies or technology stocks, which make up things like Microsoft and NVIDIA, Apple, Broadcom, AMD, Texas Instruments, Micron, Salesforce, ServiceNow, Uber, Intuit. I mean, these are all companies that when you see me trade something like XLK, I'm just long basically all of these companies. And that has been a really good trade for me this year, but it looks like we might be seeing a little bit more of a rotation. We might also be seeing a little bit of a bigger pullback starting here, but we'll see. I mean, to be fair, going off of the track record of this year, this kind of move is a dip buying opportunity. This year has been so strong for stocks, and buying every little dip has been has rewarded traders substantially. That being said, am I buying the dip here today? No, I'm going to stand to the side. Like I said, I'm going to get trailed out of my position on the technology sector, and then I'm probably going to reset here and take a look at what do I really want to. What do I want to trade here? I'm still bullish on the stock market this year. I've come out and said several times, I am bullish on gold this year. I'm still in the gold trade. Gold trade has I show you guys these sorts of trades, remember that in order to capture that kind of return on a trade every once in a while, I also have to have periods where I lose 10K or I lose 15K or even lose 20K or not all at once, but like as a total drawdown, I might have to go through a losing streak in order to find this trade. So in this case, that's kind of what happened. I got chopped up a little bit here, but I was bullish over here and here and here. So I've been bullish like all year.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Russell making a real strong push here. And today, maybe seeing a little bit of a pullback move. And if it gives me the chance, let me see. Do we have Russell as a setup? We do have the Russell as a setup. So I'll tell you what, I mean, this is probably where I am interested in most, is getting long the NAS on a pullback and the Russell on a pullback. So let's mark some pullbacks up. I mean, maybe we're starting to see a bit of a pullback setup here on the Russell. Russell, I will trade IWM. You can also trade Russell futures. And for some of the FX traders out there, if you watch the Russell, you can actually trade US 2000 as a symbol a lot of times. Alan says, Jesus, my ears. Was that loud? Let's try it again. Fair warning. Tell me if this is loud or if it's not loud enough. Yeah, anyways, I do like the Russell trade, but I probably won't get an entry anytime soon. I'll tell you that much, because the only pullback I see on this is like a 618, which is all the way down here. So I do really like the Russell. I'm probably just going to applaud Chris and Frank, who are both long the Russell. I'm going to hope that I don't get my pullback so that they can keep getting their wins, because Frank is long the Russell. Chris is long the Russell. So shout out to them. Not loud enough. Dylan, appreciate you.
Perfect candle.
We do have, on a weekly chart, we do have a perfect candle.
Perfect candle.
Right? The Russell is killing it. And I gotta say, I'm feeling a little FOMO with the Russell, because I've talked about the Russell for like months. And to be fair, I even was shorting the Russell during some portions of this. I took a lot of break even and tiny wins and some losses on the Russell. So I didn't make very much money shorting the Russell, but my concern was, look, small companies are going to struggle if interest rates stay higher for longer, but we've seen that story change in recent weeks. My bias has really changed in recent weeks, and growth seems like it might just be staying holding together, right? So anyways, I'm still also long TLT. This is another trade I'm watching here today. So this is a bond ETF. So TLT, a pretty good trade for me so far as well.
I can show a chart here on Euro Swiss is a good example. So I'll just walk you through. I mean, I've been in these trades for the last year. So I'm still waiting, but the nice thing is I've been getting paid for a year and a half on positive swap. So it's okay. I mean, we're looking at about a 4% differential, so that's a nice little buffer. But basically, when we had this level get tested, that was where I started trading. We had this trend line break. So when I went down a little bit lower, I was looking at, trying to buy another low right here that didn't fill, but we had an aggressive trend line break. So, I mean, my positions, and I'm going to estimate here, but I'm probably in a dozen positions or more on this Euro Swiss, starting here with some patience, okay, and then getting a trend line break, and then stacking some orders. I'm trying to take this thing all the way back up here towards 101. So I've stacked some orders. We had a pullback in here. So I mean, the orders are all over the place. It doesn't matter where all the individual orders are. My total position right now, this was about a, let's say a 0.3 to 0.5% drawdown. Okay, so very manageable drawdown. Like nobody's going to freak out with a less than 1% drawdown. But as price is going up and I'm building positions, now this one stung a little bit more. When we had this pullback here, I was probably in about a 2% drawdown. Okay, but again, if this goes higher, I'm looking at about a 5 to 6% gain to the upside. So I keep the trade sizes very small, so it never really worries me. And I also keep the trade sizes unique in different trade sizes, so I can trade non-FIFO. In fact, I just saw you ran an ad with OANDA. That's one of the reasons I've been in the OANDA for so long. I just talked with Tasty FX this week, and they're doing the same thing. So if you have a unique trade size as a U.S. trader, they will also allow you to trade non-FIFO.
Interesting. Yeah, that's really cool. And that's the thing is, you know, for the FX traders out there, it's just whatever you're trading, actually, it doesn't even have to be just FX. Just understand that, you know, I make this point periodically. When you see an expansion in the VIX or a plummet in the VIX, strategies that were working for you may stop working. This is why no strategy. I like to break it down really, like most strategies, Chris, work well in a high VIX environment or a low VIX environment, but very few work in both perfectly, right? Because, you know, when you get these high VIX environments, even if you're seeing this move, right, in the VIX, your super easy trade of the last few years, which has been buy every single dip imaginable, doesn't work so well because you're seeing the markets not just dip, but trend aggressively lower for months on end. But then if you're trading that same strategy now, a lot of people, I always make this warning, like a lot of people think that now you just buy stocks every time they're down even 1%, and they will simply never go down anymore. And then you'll make money because that's been what, you know, people psychologically get used to the environment they're in. But you know, we've been at a very low VIX for a long time, Chris, and I'm not bearish on stocks. I'm even thinking about taking a little position on the NASDAQ soon. But you know, I also am fully aware that of the environment that we're in. We're at a Super Bowl market. You trade it till it is no longer there, but you got to recognize when it's ending too.
That's for sure. The VIX is one thing that, I mean, I don't really know why we had a massive gap lower today. Did I miss something?
I don't either.
Yeah, I was like, there was no news this morning that was major U.S. news.
There weren't any big earnings, right? There wasn't any.
No, I mean, it's mostly today. From what I see, a lot of the earnings are today. I'm sorry, tomorrow's the ones that I'm paying attention to.
Well, look at semis. SMH is down 5%, Chris. I mean, if you take a look at the sectors to try and dissect this, I mean, it is really tech and semis that are down here today. Everything else is not nearly as beat up.
Well, if you go to, I know we like SMH, we like SOXX. Those are two semiconductor plays. So I mean, just on the initial gap, this is down, 3.6, currently trading 5%. I mean, I just think this rotation is violent. I mean, this is a violent, aggressive rotation away from Mag 7, possibly a little bit short-term out away from semiconductors. But I mean, look at this thing. This is a semiconductor ETF that's down about 5%. I mean, even your Mag 7s, your darlings.
I got your heat map here, Chris. Check this out.
Yeah.
Just while you're going. I mean, there's your day. Does this not feel very familiar to CPI day? I mean, this is the same thing, but it surprises me because I did not expect this rotation to be. It seems like it's a little bit, excuse the weird word, but cannibalistic. Like it's almost eating into the big ones, and just it's kind of weird how that surprised me. I didn't think that would have continued past CPI day, but maybe we're just getting another day. To your point, that it's just this, maybe there's more violence to this broadening out than simply just, oh, let's all hold hands and rally. Maybe it's, no, I'm going to smack your hand and I'm going to take your food from you.
Yeah. I have a couple of screenshots here. This is July 11th, where we actually did have the CPI day. And then I believe this screenshot was, if this wasn't yesterday, this would have been Monday, when it was more of the same thing. So I just want you to notice like the similarities of, look what's red compared to green. look what's red compared to green. I mean, this rotation and the same thing you just showed us is like very eerily similar. That, man, it is an aggressive rotation outside of what stocks have carried this market are no longer doing it. So in a positive way, it's refreshing to see that it's not just a narrow rally, but you also wonder, like, well, is this a bit of a house of cards situation where clearly if your largest market cap stocks are down, the overall indexes can't necessarily perform well. If you don't have the top 10% performing well, what's that?
I got something else for you just to add. Thanks to Lee in the chat. Lee mentioned that Trump said something about semiconductors, which was not necessarily constructive. So just pulled this up just because I wanted to see. So Trump says Taiwan should pay for defense, sending TSMC stock down. I noticed that it was TSM this morning. I pulled that up right as I woke up. I was like, what's going on? Did something report? I know Taiwan semi, but why I asked about earnings was because I looked at it this morning and Taiwan's earnings are tomorrow. So I was like, oh, it must be an earnings thing. But it wasn't an earning thing. It was Trump saying Taiwan should pay the U.S. for defense. TSM down, semiconductors slump amid export curb control fears. Trump's Taiwan comments. I mean, we saw this in Chris. We saw this in 2018, the trade war and the NATO stuff. Trump doesn't. He's aggressive on that stuff. He has, his strong opinions. Say what you like or dislike about the man, but he definitely, he has his very opinionated approaches to everything. And so when it comes to Taiwan, which is a big, fab producer for NVIDIA, like these are key names. So I don't know. What are your thoughts on that?
Well, I mean, you're talking about the likely president. And so now everything he says is going to be a soundbite that can do exactly this.
Back to, did I not miss this at all? Twitter. Well, remember when Twitter's like his Twitter handle was just like the market feed all the time? I did not like that, to be honest.
There were algos, or there were actually like trade services that were built around his tweets. They built derivatives around his tweets to see how they affected the market. Silly stuff.
Crazy. That's crazy.
But yeah, so I mean, when you're rocking one of the best performing sectors, everything else is going to take notice, and so this is where the high concentration makes things a little scary, right? So I mean, we're looking at the Russell today. It's like we're down 0.4%. It's not nearly as bad. I mean, the Qs are down 2.35%, SPY down 1.2. The Dow hanging in there. But actually,
the Dow is up
we're
today.
Still green on today, but the Dow's up, so we gapped lower, but we're still up.
Dow's up on an 8% gain on the VIX today as well. Gold's flat. Silver is slightly lower, lower, 2.5% lower. Oil is up today. I mean, that seems like a good old-fashioned geopolitics move now that we're looking at it.
It really does.
And
it's one thing that's going to be uncertain too. It's, Trump's likely going to be president. How far does he take tariffs, trade war, deglobalization? I don't know. And that's the one thing. I mean, I don't know how many people enjoyed 2016 to 2020 from a political sense. I certainly didn't. But if we're right back in that same wheelhouse with everything is going to be on Twitter, everything's going to be out in the open, it's going to be just in your face comments, and sometimes
maybe
it makes
you just go long VIX. Maybe that's just a long VIX story right there. Like, if there's one thing I remember during that time,
I'm good. I'm long VIX now. I'm like, so right now, I mean, I'm long at 1050 through an August hedge, but I'm not necessarily looking to carry that long term. But I do have one that's very inexpensive. My VIX position here. So I've got a 1050 call out to August 21st. That if this thing rips up here towards like $16, $17, I'll probably just take the profit on that one. But the one that could be very attractive would be if we get up to like $18, $19, $20 on the VIX. My out of the money October 16th at $20. I paid $1.60. If we get to that $20 at the money and we have some time left in that trade, that could be paying $5, $6, $7. So I have maybe let's say a 50 to 100% upside on one trade that's in the money, and then maybe a 400 to 500% upside on the other one. So I am definitely again another position of, if the market's going to drop a little bit because it's overextended, I'm long the VIX. If the market's going to be overextended, one thing I thought about coming in today's session, Nick, is could I take just a few minutes and just share something with, I know a lot of people come in here and they talk gold and they want to see the NASDAQ, they want to see currency pairs. I just want to take like 5 minutes and just give a very simple overview of, if I could help traders understand options, and it's not just, bear with me, I'm saying like options on anything, because I can trade options on gold. When I talked to the CEO of Tasty FX this week, Pete Molmat, and I saw him in Chicago this last weekend. I said something that caught his attention. I was like, I think the futures trading is easier than Forex. And he's like, oh, you think futures is easier than Forex? I'm like, yes, because you can trade options around it. I've been a Forex trader for 15 years, man.
Yeah.
And I can say that the way I've made the most money in Forex is by trading super, super small, using almost no leverage, and being extremely patient with my trades to play out. And futures, I can have defined risk. I can be dead wrong and know that I'm only going to risk a certain amount of money. So as an example, what's been, you want to talk gold for a second? Is that an easy one to talk options on gold?
Let's do gold, and then I'll give you the floor to kind of go through as much as you want with it. So you're in charge. So gold, gold, breaking through the highs, a little bit of rejection here, just in the last few minutes, but go on. What do you want to get into with gold? So you're talking options on gold too?
Yes. So to do the analysis, I mean, I'm looking at XAU. If you want to go to GC, that's gold futures. All right, you'll see how this all kind of plays out from doing some analysis. Now, I did most of my work on XAU. You can see here it's very similar, but what was happening here? There's a couple ways to add some exposure. Okay, so if we talk about XAU USD, and I'm watching these prices. So when we started to pull back here towards like 2,300. All I needed to do with my trade was, okay, so we had this big rip to the upside, we pull back, up to the upside, pull back, right here at support. Now, we'll be a little technical here. I think traders can see this and say that's a good opportunity to buy low. You're absolutely right. Now, we can buy low and you can get this run and you're crushing it to the upside, but how much does it cost to buy gold? Well, if you're buying GLD, you're buying that around 212. Pfizer crossing $30. I'm excited because I've been in that trade for a long time. Gold at, we'll say 2,900. GLD was around 212. Okay. If you wanted to buy 100 shares, and when you participate in gold, Nick, are you trading GLD mostly?
I trade GLD.
Yeah. Or are you trading XAU?
GLD. Okay.
GLD. So let's say you bought it at 212. All right. So we're at 100 shares. Okay. Now, if you wanted to buy 100 shares to control options and sell covered calls and lower your cost basis, 100 shares is going to cost you $21,000 cash. Now there's margin accounts, which would cut that in half. So you're looking at about $10,000, about $10,000, $11,000. You could have portfolio margin, which would give you maybe another, 3-to-1 leverage. But again, you're kind of trading on margin. And for stocks, that's okay, but you can't trade on margin with options. You can't trade on margin with futures. Okay, they're already leveraged as it is. There's no margin on that. So you can't borrow against them. Now, not a lot of traders that I know that are starting out, figuring things out in the markets for maybe the first 0 to 5 years of trading, taking a $21,000 position is a pretty big stake in something. And granted, if gold was going to drop by 3 to 5%, you're down 3 to 5%.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.